Hi, everybody. Welcome to another live stream. My name is Daniel Evans. I'm the Chief Executive here at Birmingham Enterprise Community. These live streams are all about providing you with insight, with information, with stories to really support you on your entrepreneurial journey. Today's topic, this is something I think is very underrated because as I've just been chatting to the guys before we started the stream. The amount of businesses that maybe are unaware of this or don't kind of get involved when actually for bringing money back into your business, this is well such a great way to do that. We're joined live today by our friends at Apogee Associates who are going to take us
Hello,
through
everyone.
a bit of
Hello.
information around what R&D tax credits are, how it all works. These guys are the experts, so we really are here today to listen and find out some more. Uh, we'll have a Q&A at the end as well, so any questions, anything else you want to know, please feel free to drop some comments in the chat, whether you're watching on LinkedIn, whether you're watching on YouTube, whether you're watching on Twitter, either live or after the fact. Please do let us know your questions. Guys, welcome to today.
Hello. Hello, everyone. Hi there,
And
Daniel. Thank you
do
for
you want
your.
to do you want to start off by giving us an introduction as to who you both are?
Absolutely, absolutely. So, good morning, everyone. Thanks, Daniel, for the introduction. I hope you're good. So, my name is Antonio Narducci. I'm a marketing associate at Apogee. I will meet today my colleague Jack Morgan, associate director and co-founder of Apogee Associates. So, who are Apogee? Apogee is a team of R&D tax credit specialists, and what we do is to help UK innovative companies to be rewarded for their innovations. A bit of a agenda for today. We will go through a really brief overview of the R&D tax credit relief. We will then see what qualifying activity and qualifying expenditure mean and why those two are so important when it comes to compile an R&D tax credit application. We'll then see the recovery bit, which is obviously very interesting, and how the mechanism behind the incentive works. And finally, where Apogee come in this process and how we can help with our service to optimize and maximize an R&D tax credit application. And like Daniel said already, we will then leave some time at the end for questions. All right, let's get started with a bit of background. So why do HMRC do that? Obviously, HMRC is not known for giving money away for nothing. This is one of the reasons why a lot of business owners are still skeptical towards the incentive. The main reason why the government decided to introduce the incentive in the year 2000 is because they want to stimulate the UK economy. How? By investing in innovation. The government believed that innovative companies have better chances to grow. And as we all know, if a company is growing, it's then becoming more profitable as well, which is a key point here, because if a company is becoming more profitable, they will then pay higher level of tax. So more corporation tax, more tax on dividends. But not only that, obviously, if a company is growing, they might need to uh, improve their workforce, which means they will hire more employees. And again, that means they will then pay taxes under the form of national insurance contribution and pension contributions as well. Also, let's say if a company is producing more, they might need to purchase new machineries or simply more materials to sustain the higher level of production. And again, what will happen? They will pay taxes under the form of VAT in this instance. So I guess in a nutshell, the incentive makes money for the government. HMRC have done their research and they found out that for each pound awarded to companies doing R&D activities, they will then stimulate an additional £1.50 up to £2.30 investment in innovation in the long term. Also, innovative companies have gained a competitive advantage and perform better, and that means the more innovative companies are operating in the UK economy, the more the whole UK economy will gain this competitive advantage. How does that work? HMRC decided to keep the criteria, the eligibility criteria, quite broad. There are no restrictions in terms of company size or sectors that can potentially benefit from the incentive. All it matters is obviously the company needs to be UK based, pay corporation tax, and a crucial point is they need to be undertaking qualifying activity and qualifying expenditure in order to be eligible. My colleague Jack now will enter in some of technical details of both. So I guess over to you, Jack.
Cool. Yeah, thank you, Antonio. I'm just trying to figure out how I can change the slide.
I think I can take this slide for you.
Oh, perfect. So yeah, no, I think as Antonio said, it's really important to understand both qualifying and qualifying expenditure in quite a bit of detail, particularly activity, because when you say R&D, research and development, to the vast majority of people, including myself, before I got involved in this around about 4 years ago, the first things that spring to mind are people developing pharmaceuticals, people developing rockets, the really, really techie stuff, which obviously does qualify, but it does extend much, much broader than that. And essentially, HMRC give 4 key criteria to help guide a company as to whether they're eligible or not. And as a high level, a company must be seeking an advance in science and technology. There must be technical uncertainties encountered during the project. The solution can't be readily deducible to a competent professional, and you must actually attempt to overcome your technical uncertainties and achieve your advance. So to kind of dig into those in a little bit more detail, if I can go on to the next slide. So digging into the first one a little bit more, an advance in science and technology must be sought by the project. So the operative word from this part of the criteria is the word sought. What that essentially means is that the outcome of the project basically has no bearing on the eligibility of its recovery through the R&D incentive. So whether it's successful, whether it fails, whether it's ongoing, it doesn't really matter. Providing time, money, and resources has been spent, then it can qualify for R&D relief. So to kind of dig into what advanced in science and technology means as well, it basically means trying to improve the state of something that already exists within the sector. So if you're developing a new product, if you're trying to make things in a more efficient way, more cost-effective way, you're trying to reduce the waste associated with the production of something, that would be considered an advance in science and technology. So to put this really, really simply, if you're trying to solve a problem and there's some technology involved in the solution, there's a good chance you're going to be doing some kind of R&D in the eyes of HMRC. So the next one, technical uncertainty encountered during the project. Again, there is an operative word here. This time it is technical. Obviously, a lot of projects have some kind of uncertainty associated with how they're going to be positioned in the market, what kind of marketing strategies are going to be undertaken to try and improve the commercial elements of a certain product or project or service. Unfortunately, in the eyes of HMRC, that would be seen as a commercial uncertainty as opposed to a technical one. So it is important with R&D to focus on the technical element of a project, or else it can just fall outside of the remit of the incentive. The best way to think about best way to figure out if there has been some kind of uncertainty in a project is, or if there is going to be some kind of uncertainty in a project, is if you know what you want to achieve, or you know that something can be achieved, but you're not quite sure how you're going to get there, and you're going to have to undertake some kind of trial and error in order to figure out the optimum way to achieve your solution. That's kind of where the uncertainty comes into it. So, I mean, trial and error is always a great indicator of R&D. If there is some kind of technical trial and error in your project, there's a good chance you're going to be undertaking some kind of R&D. So going on to the next criteria, can't be readily deduced by a competent professional. This one can be a little bit confusing and can catch people out at times. I think when you say this to a lot of people, immediately their mind jumps to, the leading individuals in the field. They've got to be working on it for it to be eligible. That's not quite what it means. It doesn't need to be to that extent. What it basically means is you've got to have some kind of individuals with relevant experience, relevant qualifications in the sector that enable them to undertake the project to a competent level. So I've given an example here. If you take a software developer or even me and ask them to develop a technical garment, obviously they're going to struggle quite a bit because they haven't had experience developing fabrics on the manufacturing machinery required to develop it. Whereas if you take someone that's worked with Gore-Tex for the past 10, 15 years and you're asking them to develop some kind of technical garment, they're going to be in a much better place to come up with a solution. And if the solution to them isn't readily deducible and they're having to undergo some kind of trial and error, then there's likely going to be some elements of R&D there. And then finally, we come on to there's got to be you've actually got to do something to overcome your uncertainty and achieve your advance. What this basically means is you've got to go a little bit further than just thinking about it. Obviously, loads of people have great ideas about innovative businesses, innovative products they can develop. I probably come up with one on nearly a weekly basis, but unfortunately, I wouldn't be able to submit an R&D application because I haven't spent any time, I haven't spent any money, I haven't spent any resource trying to develop a solution. So that's essentially what that criteria means as well. So to kind of summarize all of that, if you are improving internal processes in some way, potentially using software, if you're integrating things in a new and novel way, potentially you're integrating Xero or Sage with a warehouse management system, with some kind of e-commerce function to automate some of your processes to reduce the likelihood of human error, there's a good chance you'll be doing some R&D. Likewise, if you're doing the similar thing with your manufacturing equipment to try and reduce the waste you produce, if you're trying to increase the efficiency, trying to increase the output or the amount of units you can produce per hour without reducing the accuracy of the output, again, there's likely going to be some R&D there. And then obviously, if you're developing some new products, if you're iterating some existing ones in some way to make them a little bit different, a little bit better, if you're generally trying to operate more environmentally friendly as a business, you're going to be doing some kind of R&D in the eyes of HMRC. Obviously, we need to quantify all of those activities. We need to ascribe some kind of cost associated with their development. And HMRC use a term called qualifying expenditure to do that. And it's made up of 4 key categories, and I will dig into those in more detail. But at a high level, they are staff, consumables, software, and subcontractors. So starting with the staff costs, these can be divided into both direct staff involvement and indirect staff involvement. When I say direct, it kind of means anyone who is hands-on with the R&D project. So they can be involved in project management, prototyping, testing, coding. The actual development itself, I guess it can be seen as. Whereas any indirect involvement it's more the individuals involved in an administrative capacity. So you could be involved in processing purchase orders in relation to the R&D, invoices in relation to the R&D, conducting some kind of maintenance on R&D related software or R&D related systems. That would be considered your indirect involvement. As part of those costs, you're not only able to include their salary costs, but any employer's national insurance contributions, any employer's pension contributions, any bonus payments, overtime payments, and some travel expenses as well. Now, I won't go into the detail on the travel expenses because it is a bit of a nuanced area. But coming on to software, quite similar to staff, you're able to recover not only direct software costs, but indirect software costs here. Again, direct is kind of anything that's directly employed in the R&D. So if you're a manufacturing company, for example, and you have some kind of CAD program to design your products, iterate the designs in some way, conduct some form of virtual simulations prior to prototyping, that would be considered a direct software cost. Whereas an indirect software cost is going to be your Sages, your Xeros. If you've got a HR platform used to manage your R&D staff, again, it's all those. It'll be all of those kind of ancillary platforms you use to undertake the R&D. And then next we've got our consumables category. The definition of consumables for R&D is it's got to be consumed, modified, or destroyed during the project. So as part of that, we're able to recover a portion of your heat, light and power bill. But usually a bigger element of this cost category is physical materials used in prototyping. But it is important to note that there's got to be some kind of financial risk here. So with prototypes, obviously, often a lot of materials are used, modified to develop them. But if that prototype is subsequently put on the shelf, sold on, used to turn a profit, obviously there's no real financial risk there. So unfortunately, those material costs wouldn't be able to be recovered. But as is often the case with prototyping, there's usually 4, 5, 6, if not more, prototypes that are developed before you come up with your final solution. And it's all of those iterations essentially that you go through before you get to your final product, which you'd be able to recover the material costs for. There are some really nuanced cases where you can recover the material costs of a prototype that is sold on. It's got to be a pretty big prototype, admittedly. If you're developing a dam, for example, obviously you're not going to develop a prototype dam before you develop the real thing. But it's quite unique, quite rare when that comes up, and it's better to look at that on a case-by-case basis. And then finally, you've got your subcontractor costs. Best way to think about this is it's anyone who's undertaking R&D on your behalf, but isn't sitting on your payroll. So it can be a third-party company, it can be a self-employed contractor, it can be an externally provided worker. Again, there's got to be an element of financial risk here, though. So if you're paying someone an hourly or a day rate, you're likely going to be incurring that financial risk. But if you're paying your subcontractors on completion of the project, there's a good chance they'll be incurring the financial risk. So again, it's always good to look at this on a case-by-case basis, and it is something that a lot of people can slip up on sometimes. So it is really good to look into your subcontractors in a lot of detail. So to kind of summarize all of those costs, when you put all of those together, so for every £1 you spend on either a staff member involved in R&D, consumables used in R&D, or a piece of software used in R&D, you'll get £1 towards your qualifying expenditure. And for every £1 you spend on subcontractors involved in R&D, you'll get 65p towards your qualifying expenditure. And whatever that total figure comes to, you can expect to get back between 19 to 33% of that. The reason there's such a range is it's completely dependent on your tax position. If you're very profit making, it will be very different to if you're very loss making, and that will be very different to if you're around about break even. It's something you do need to look at on a case by case basis based on the company. But something that is worth noting is you can look back at your 2 prior financial years. So if you had a February year end, for example, sitting here today, you could look at any activity and costs incurred during the periods ending February 2020 and February 2021. And as soon as we went into March, we would unfortunately lose the opportunity to recover those costs in 2020. So it is important to kind of keep a note of when your year end is, just to make sure you get your R&D application submitted in time. So to obviously give that example there, if you spend about £100,000 in R&D, you're going to get back somewhere between £19,000 to £33,000. And that will come in the form of a reduction in future corporation tax, a refund of corporation tax already paid, or as a cash credit. Which one you get, it's again, it's dependent on your unique circumstances of your company, basically. And as you can see, the average recovery for any business across all sectors is £62,500 per financial year. We've worked with companies where it's less than that. We've worked with companies where it's quite a bit more than that as well. But the average recovery from HMRC's official statistics is £62,500 per financial year. So it can be a pretty worthwhile exercise for quite a lot of businesses. So where does Apogee come into the mix with all of this? As Antonio alluded to at the start, unfortunately, HMRC don't give money out for nothing. You do need to demonstrate that you have undertaken eligible activity, you have incurred those qualifying expenses, and you need to demonstrate that in the form of a technical report, which explains everything you've done, why that qualifies under their guidelines. So, if we move to the next one. So who are Apogee? We're a values-driven and highly specialist R&D tax credit firm. We focus exclusively on R&D tax credits. So there are lots of firms out there which offer R&D tax credits in addition to other accounting services, patent box, capital allowances. But our kind of complete focus on R&D is what I believe enables us to offer the most holistic offering in the industry, going far beyond just the compilation of your report. We essentially like to see ourselves as becoming your internal R&D team. So not only do we submit your report for you on an annual basis, we like to look after you throughout the year. We'll help you track your R&D activity more accurately. We like to help you track your R&D expenditure more accurately as well. There is no legislative requirement from HMRC to do so. But when we do reflect that in the report, and it just adds that little bit extra level of security to it, answering any questions they have up front, giving them that reassurance that what we're putting forward is as accurate as it physically can be. On top of all that, we do like to look after the environment in the process. Apogee have an entirely climate positive workforce. We plant 100 trees per application we put forward. So if we do a 2-year retrospective one, that'll be 200 trees. And we also donate 5% of all of our profits to the protection of the rainforests as well. So what does it actually look like working with Apogee? We write a pretty comprehensive technical report. It usually is somewhere between 20 to 50 pages long. For your reassurance, we put that together completely. It explains everything you've done through your financial periods, and it explains to HMRC why that qualifies for R&D relief under their guidance. We'll take some financial data off you in the form of a payroll file, purchase ledger, P&L. We'll process that into process all of that our end in some pretty easy to digest templates. We'll go through that with you, and we'll guide what costs we should include and specifically what costs we should avoid as well. And we'll also help you come up with a reasonable apportionment of those costs to include in the application. Relatively uniquely in the industry, we also detail what costs we're not looking to include as well. And it kind of ties into our process as a whole. We answer all of HMRC's questions up front. It leaves them nothing to come back with. We leave no stone unturned. And as a result, we've submitted well over 500 of these applications. In fact, it might be 600 now since I put this together. And we have a 100% success rate as well. And during that time, we've never had anything paid, anything less than full. We've never even received a query from HMRC. And what's the cost for you? So whatever you get back, we charge 20% of that. And that's fully contingent on the success of the application, and it's payable when you get paid. On top of all of that, we have no lock-in contracts, which during my time in the industry, I've seen some interesting contract lengths. So we say ranging from anywhere between 2 to, in some instances, 5 or 6 years. But we depend exclusively on our service to retain our clients. If someone leaves us, we ask ourselves why. But saying that in our time doing this, all of our clients have continued to use Apogee. And I think our service and the value we provide is pretty reflective through our Google and Trustpilot reviews, where we've received nothing less than 5-star up until this point. So I think I've kind of covered everything there. So thank you for listening, everybody. Really appreciate you tuning in today or listening after the live presentation. But if anyone's got any questions who are live now, it'd be really great to run through them with you.
Wonderful. Thank you very much, guys. That was great. Nice and comprehensive. So any questions, please do ask them on the chat, whichever platform you're on. We've got a couple of questions that have already come in through our Slack channel, so I will start with them. But please do put questions if you've got questions. So the first question's come in is asked about timelines. So how long does it take from the kind of aspect of putting the report together, and then when it's submitted, how long does it take until payment's made?
So HMRC say it will take 28 days. They're quite inconsistent with that, admittedly. We've had some processed in 2 or 3 days. We've had some processed in a couple of months. What we say the best kind of time frame to aim for realistically is somewhere between 6 to 8 weeks. That's generally what's the most likely time frame you'll get it back in. But we will follow up with HMRC after their promised 28 days on your behalf until your payment is remitted to you. So we kind of take that burden on. We'll do what we can to ensure that is as quick and as seamless as possible.
Wonderful, fantastic. Next question is one about you'd mentioned at the start of the stream or early on that this is for having companies that are registered in the UK. Is there eligibility for companies that have got registered entity in the UK but part of their operations overseas as well?
It sounds like something that would be better to look on a case-by-case basis, because we've got companies who are registered in the UK and they subcontract some work out abroad. Obviously, you are able to recover some subcontractor costs. If you're part of a bigger group, it might affect which R&D scheme you're actually able to recover your costs under. So the one I've discussed today is predominantly the SME incentive. There is one for larger companies called the RDEC scheme, whereas if you're part of a larger group, you might fall under. But yeah, you'll still be able to recover your costs through one mechanism or another.
Awesome. Question that's come in through YouTube. So more of a clarification point. So Joe's, but I'm confused about the numbers. If you get £1 back on £1 spent on qualifying activities, then how come the eventual numbers are between 19 and 33% of the overall spend?
Sure. So sorry, I probably should have clarified that a bit more. So the £1 you get for every £1, sorry, the £1 you get for every £1 you spend on staff, suppliers, staff, materials, and software, and 65p for every subcontractor is towards your qualifying expenditure figure. And the qualifying expenditure figure isn't what you get back. It just helps determine what your overall recovery is. And the actual benefit you'll receive will be 19% to 33% of your qualifying expenditure figure. So if you were to spend about £100,000 on R&D, through those different cost categories, you could expect back between 19 to 33% of that. I hope that clears it up.
Yes, yeah. Joe, do let us know if you've got any questions on that still. Please do keep those questions coming in. I'm going to just go back to the Slack quickly and see what we've got on there. I'm just scrolling past the old ones. One from me was to take a look at these. If I'm right, there were some changes that were made recently around costs like cloud storage. So in terms of that, could you tell us a little bit about that, and whether, if you've kind of already put in a claim and then these changes are made, can you retrospectively go back and make changes?
So when HMRC changed their guidance, it's usually for future financial periods, and you are right, and they have made a couple of modifications over the recent budgets, but normally it's to do with future financial periods. So looking back historically, there's usually nothing to change because the rules are pretty set for them. But going forward, yeah, it's absolutely worth considering, like the cloud storage costs and other changes they've made as well.
Wonderful, great. Next question that's in here: is there any limitations on what you can spend the money on that you get back?
No. I've got some funny stories about what people have. One of my clients has bought a Porsche historically with the money they've got back, which is a pretty cool thing to go spend the money on. But no, a lot of companies go and obviously reinvest that in the company, but you can take that as a dividend. You can bring more staff on. You buy more materials, invest more in innovation. There is really no no set rules on what you can and can't spend your money on.
You could buy yourself a Porsche, folks. There you go. The next one is what about this? Is something you guys should do yourself, but I think it's for those looking at others. So with tracking, so through the year, you mentioned about kind of keeping track of what you're spending and that kind of stuff. The question is there any tips or anything that you'd recommend in terms of keeping track of records for the year?
Yeah, so I think the key one, well, there's a couple of things. Obviously, there's the activity element and there's the expenditure element. The activity element, if you haven't been through the process of compiling an application before, is probably a bit more straightforward. Just keep a track of what your projects are trying to achieve, any difficulties you encounter during those projects, what you do to try and overcome them, which doesn't work, and what you you try and do, which ultimately does work as well, because remember that trial and error is really good to reflect in an R&D application. From an expenditure element, when you're putting forward an application for your retrospective periods, HMRC are, they're aware that you probably haven't kept accurate records of all the R&D you've been undertaking, so they're happy for you to do it on kind of a reasonable best estimate basis. But if you are able to track it a little bit more accurately, what specific invoices have been documented against, software development, what materials have been used in the development of certain prototypes, that would really help. And when you're tracking what individuals' time is spent on R&D as well, even if you just on like a quarterly basis saying so much of X's time has been spent doing R&D this month, that just doing it on a regular basis can really help track it throughout the period.
Yeah, and that's a key when you're tracking anything to do with financials, little and often, keeping on top of it.
Absolutely,
is really key. So whilst I just wait, hey, guys, any more questions, please do ask them. One from me, whilst we wait. I'd read I think we mentioned earlier that kind of stat around the fact that 80% of businesses, or estimated 80%, don't claim their R&D tax credits, which blows my mind. When you think you could, put some serious cash back into the business. From your experience, why do you think it's so high? Why is that?
I think the predominant one, there's probably a joint view, to be honest. A lot of companies don't believe they're doing R&D or have never been told about it. Quite a big one that we come across quite a lot is that they have had a chat with their accountant or another R&D provider, and they've told them they don't have an R&D application. Some people just don't want to get involved with R&D, with HMRC, sorry. They think it's some kind of tax avoidance, it can appear a bit dodgy, but as Antonio said, it is something they want to promote. It makes them money in the long run to give this money away. So it is by no means, it's not trying to avoid tax in any way. It benefits the economy directly. So yeah, I think those are the key ones, to be honest.
Yeah. No, that makes a lot of sense. And I know from certainly, the government do like to push on this. As you said, there are those circular benefits. The more that we grow businesses, the better. And kind of what we've seen globally, there's very few countries who have a system as generous as this when it comes to R&D tax credits.
Absolutely. Yeah,
absolutely. No, it's a lot of developed countries do have a form of R&D tax credit system in place, but I am aware that the UK is definitely up there with one of the most underutilized as well. So it's kind of why Antonio and I have jobs, to be honest. It's to try and promote it, trying to get more companies to use it. And obviously to get the most out of it as well, because a lot of our work recently has been coming from reviewing applications being put forward, that have been put forward by companies internally, by their accountants, or by other R&D providers. And if we review it, we may be able to find more. We may not, but at the very least, it's we might be able to reassure you that you're already in safe hands.
Yeah, 100%. So we've had no other questions in, so I'm assuming that everybody has kind of understood and is okay. A couple of final things then from me. Number one, the kind of big one, if people are unsure and think, I don't know whether we have something or not, what's the best thing for them to do?
It's probably going to be to schedule a call with one of the team here. I'm aware we've got some time booked in at the community. I believe it's in March, Daniel, where we'll be doing some one-to-one sessions with people. So we're more than happy to book some face-to-face time with people there as well.
Absolutely.
But in the meantime, if you wanted to have a chat about any specific questions about your specific business, more than happy to run through those of anyone.
Fantastic. And what's the best platform to reach out to you guys?
Well, you can either email me. My email is jack@apogee.co.uk. Alternatively, there's a contact form on our website. There's my mobile number on the website as well. So feel free to contact me by any means.
Wonderful. Thank you very much. So as Jack mentioned, the guys are going to be coming in physically here at AlphaWorks in March. Keep an eye out on our on social media, newsletter, events pages for further details on that. Come and have a chat with them and find out. I mean, putting a few £1,000s back into the business, why would you not want to kind of check that out? Awesome, guys. Thank you for sharing your insight today. That's been super helpful. Obviously, for anybody watching this back afterwards or in another time, again, make sure to kind of make use of this information the best possible way. Have a great day, guys.
Thanks, Daniel. Thanks for having us.
Thank you, everyone.
See you later, everyone. Bye-bye.
Bye-bye.